Welcome, dear traders. Risk appetite seems to have returned to stock markets with lower US Treasury yields, the weaker US dollar and fallen oil prices. On Thursday morning, stock indexes in Japan and the Antipodean countries were moving in the green. Nevertheless, investors remain cautious about risk assets. It's me, Kate Stichin, and you are watching a recap of the Asian session on October 5. Since the beginning of this week, the global government bond markets have experienced a meltdown. As a result, US Treasury yields have risen to multi-year highs. At the same time, the United States has received a significant boost. As a result, the greenback strengthened to almost 11 months highs, above 107. However, after yesterday's mixed reports on the US labor market and services sector, the US dollar had to retreat. Its index began Thursday's trading session within the range of 106.50 and 106.80. However, after a brief consolidation and profit-taking, the US currency soared to 106.70. The US dollar continues to receive support from the strong US economy and the prospect of higher interest rates from the US Central Bank. As the markets closely watch the Fed's statements, the US dollar index has managed to keep gaining ground. Recent comments from several US financial officials confirmed that the Fed might continue its tightening cycle. The markets are now pricing in the possibility of at least one more rate hike by the end of the year. And today, markets expect speeches from 4 Federal Reserve officials, the presidents of the Cleveland, Richmond, and San Francisco federal banks, as well as FOMC member Michael Barr. Their comments, as well as fresh economic statistics, can affect the currency market. Meanwhile, Japanese officials have not commented on the Japanese currency's exchange rate in recent days. Although the yen has made several sharp jumps during this time, Tokyo has neither confirmed nor denied its intervention in the foreign exchange market to strengthen the national currency. At the same time, the Bank of Japan's latest data shows that it has not been conducting any yen buying operations. It's clear from the pair's movement that any intervention is unlikely to permanently prevent the yen from depreciation. As long as there is a significant gap between the United States and the Japanese central bank's policies, the yen is poised to trade with a bearish sentiment. In the coming weeks, the dollar-yen pair may post some gains. Since January, the pair has been in a strong bullish trend, rising by 14%. Despite the fact that the pair is moving in the bullish trend, it managed to fall slightly on the back of a weak dollar today. Early Thursday, the pair showed a moderate decline in the range of 148.20 and 149.10, as it did on a Monday this week. However, the pair continued to rise, and by the end of the Asian session had climbed above 149. The brief pause in the US dollar's rally helped the Australian dollar gain some ground in the Asian session, and the Aussie held near resistance for a while but then retreated closer to support. Besides risk sentiment, oil prices and domestic data also supported the Aussie. Today's reports showed that Australia's trade balance improved thanks to growth in exports. Against this positive news, the country's currency closed the Aussie session in the green at 0.6345. The New Zealand dollar also rose during today's Asian trading session. The Kiwi recouped some of its losses from the beginning of the week and is moving on the bullish momentum within the daily range of 0.5907 and 0.5952. Notably, the country's central bank left the interest rate unchanged yesterday. In addition, the regulator said that policy needs to remain restrictive to bring inflation to heel. At the same time, the Reserve Bank of New Zealand noted that the prospects for economic growth remained subdued. Therefore, the New Zealand currency is in a vulnerable position, depending on the sentiment of the US dollar. While the greenback took a breather, the Kiwi managed to grow to 0.5924 today. And that's all for now. Leave your comments below and don't miss our next video review. Remember that staying up to date is the key to success in your trading. See you online soon!